3,000 shillings, below 3,000 shillings, then what happens is that this amount is not taxable. However, if they give you cash, whatever amount of cash they give you becomes taxable. Okay, so it's very important that you are aware about this, that there's an aspect of non-cash benefits and cash. So when they are cash, they become taxable. When they're non-cash and below 3,000 shillings, they're not taxable. If they give you meals, and the employees are entitled to meals worth 4,000 shillings every month without it being taxable. If it exceeds 4,000 shillings, it becomes taxable. But the trick is that they don't give you in cash, they give you in kind. So that means you either have someone coming to provide food in the office and you agree on a rate of 4,000 shillings per person every month, then that becomes a business expense and does not also interfere with the employees. Now, for airtime, sorry, before I forget, there's usually the assumption that the airtime they give you is used as follows: 30% is personal, 70% is official. Now, this 30% that is personal, so 30% of the 3,000 that they give you is 300. You can see clearly that this benefit that you draw is below 3,000 shillings and is not taxable. So to exceed this 3,000 bob, that would mean they're giving you airtime worth 10,000 at least. So if they give you airtime worth 10,000, 30% of that would be 3,000. And then it becomes a taxable benefit. So need to be aware about that. When they're giving you the option of using the company car, try and negotiate to have or use your personal car, then claim back mileage. Okay. Now, this mileage claim is an expense that is allowable for the business. Okay. And from a tax, from an individual perspective, it's a reimbursement of costs and therefore is not taxable, despite the fact that you get more than you actually put in. So I'll give an example. You buy a motor vehicle, you have your car, it's a 2,000cc vehicle, uses petrol, it's maybe 8 years old and all that. There is a way, using the AA rates, they compute the rate that you expected to get as a return per kilometer. So assuming it gives you 68 shillings per kilometer. Okay, that means if you're claiming mileage, and say I started my official duty at 8 p.m. when I left, 8 a.m. when I left the office, I went all the way to Naivasha and came back. I was back by maybe 6 p.m. I covered a distance of 300 kilometers. So the return you expect on that would be 68,000 multiplied by, sorry, 300 kilometers multiplied by 68 shillings per kilometer. So your refund on this will be 20,400. You see, you get more money having employed your own asset to facilitate the business of the employer, as opposed to when you use their vehicle. Because when you use their vehicle, they'll want, the revenue authority will expect restrictions. You'll only use the car between 8 and 5, or maybe for official functions. If you're found using the car after that, then a benefit is deemed to be accrued to you, and they'll say it's 2% of the cost of the motor vehicle, despite the year when it was bought. So if it's an old car, maybe bought in 2008, was bought at 2 million, and they're saying 2% of 2 million, that means 40,000 will be taxed on you. So you're better off negotiating a mileage arrangement as opposed to getting a company car, which you use whichever way you'd like. Okay. Or limit your use. So between official working hours or strictly for official purposes. So you don't go with it. It doesn't sleep at your yard, at home, or in your parking or anywhere. It is left at the office premises. Maybe what I can mention about housing, you could see that maybe the employer is willing to pay for a house, maybe in Kileleshwa, meaning he's willing to spend maybe 100K on rent. And you don't have a problem living elsewhere. So you could negotiate that they give you this amount in cash. So if they give you in cash, assuming 30% of that is that 30K, that means you have 70,000 to spend on rent, and you get a house maybe worth 40,000 in an area where you're just comfortable, or 50. That means you have got disposable income of maybe between 20 and 30K. That is something you could consider as well. So this money, then you can be able to put into another project or investment of your choice. I know I've run way past my time. I don't know.
It's okay. I think you can continue.
Okay. So question number 6 was legal ways of reducing taxable income as a company. For a company, it becomes a little bit tricky because the scrutiny is always around wholly and exclusively used in the generation of business income. So you must always ensure that whatever expenses you're incurring are around that. I have not seen serious incentives around that, apart from incentives in relation to capital investments. So if you are maybe constructing a hotel, then you are entitled to, or constructing a building or a factory and all that, then you're entitled to capital allowances. If you are going to buy assets, then you get certain deductions in terms of wear and tear. But in terms of specific benefits or ways you can structure, becomes a little bit difficult and usually case on case. So maybe we could give an example. If you could lend money to the business and the business pays you with interest, but the minute they're paying you with interest is an expectation of withholding tax. So it becomes a very dicey issue in terms when it comes to the company as opposed to when you're dealing with individuals. So that for companies may be a bit of a challenge. I think the most important would be making sure that expenses that you incur are wholly and exclusively used for the generation of business income. Now, there's a question about handling of taxes related to retirement benefits. A lot of this is usually very structured, and it's usually out of the scope. What I'd encourage you to do is avoid getting your retirement amounts before retirement age, because then you find that there's a question of tax that arises, and especially if you've been making contributions to registered pension scheme. Any other way, there is usually that aspect of tax that will arise. And then the other case where there's an issue of tax as well, they're also giving you lump sum. So when they're giving you a lump sum and it exceeds a certain amount, I think it should be around 400,000, and then 600, 600, 600. Then you'll find that when they are disbursing the money to you in that way, then there's a question of tax which arises. But many times you find that if you hit the retirement age, then you get your allowances without paying tax. And the whole idea is that these entities which you contribute to are expected to pay tax. Okay, so once they pay tax on those amounts, then the Revenue Authority is satisfied. The only challenge comes if you're especially collecting money before your retirement age. Then you'll find that there's a question of tax. Now, there's a question about which withholding taxes are final and which ones are not. Now, in relation to dividends, okay, let me say this. Most times withholding tax are not final. The instances where they are final, we'll find will be in relation to dividends, and these are dividends for companies listed on the stock exchange. So that they'll deduct 5%, which is final tax. Ideally, the interest from the bank, the 15%, should be final tax. But in practice, what we've seen is that the Revenue Authority still goes ahead to demand that you account for the difference. But post-COVID, that was supposed to be the case, that you only, once that amount has been subjected to that 15% withholding tax, then that should be final. But again, these things will be, we'll have to look at it on a case-by-case basis to be able to look at in-depth into it. Now, maybe I can also just mention withholding tax on any interest earned by a non-resident, then would be final tax from the Kenyan perspective. Because once you deduct that rate at maybe 15% or mostly 15%, then that's it. If it's dividend and you withhold maybe 10% or 15%, that's final. Yeah. If it's on professional management services and all that, you deduct maybe 20%. That is final from the Kenyan perspective. Now, those people will be required then to account for that income in their country where they're residents. And if there are any obligations that they need to take care of, then they will take care of it at that point. How does one successfully get refund on KRA income tax paid? Now, that as I mentioned earlier, it becomes a dicey issue because then you have to prepare records which you present to KRA. So KRA are very keen not to be making payments. That's not their core mandate, not to refund. And I remember a tax lesson I was having with some gentlemen who had worked in KRA for a long time in customs, and the arguments were, in most cases, they would prefer that you pay the tax that they have raised, then you go and contest it at a later stage. And if they are satisfied, then they can give you a refund. But most times, their job is to collect. That's their primary role. And therefore, they are not keen to be doing refunds. So in terms of documentation, we need audited financial statements, you need proof of payment, you need to substantiate that the taxes you paid were actually in error, and therefore find ways of making sure that then that is supported sufficiently to be able to be refunded. This is a lot of the information KRA will ask for will be case by case, and will be required by the Revenue Authority. Oh, the other thing that is usually very important is that before they give you a refund of whatever nature, they'll expect that you are compliant with all the other taxes. So assuming you've got a debt under VAT and you're saying, I have a paid income tax, they'll expect you to have to clear your VAT first before they start processing your income tax. So it's usually a way for them to get you and to squeeze you to comply where you have not been compliant. That is why it's important that even as you're considering this, you try and ensure that when you're handling your taxes, you're always ahead of the game. Know when you're supposed to pay, how much you're supposed to pay, make sure that it's an accurate amount. If you're not supposed to pay, you know I'm not supposed to pay, and you don't make the mistake of paying. Okay? Because once you pay, that's it. But and the other thing is this, many times, if you find that you've overpaid, you'll find a credit in the system, and therefore you can be able to make that application using on that basis. Either it's of taxes which are overpaid or they were paid in error. Then from that, then they'll ask you for the relevant documents that they will need. So those ones will be case by case. But I know for sure for a business, they need audited financial statements. Maybe a tax computation would come along. Or even for sole proprietorships, they'll need to know and they'll require you to support your expenses. Now, what I know is that many times for individuals, there is because of poor record keeping and all that, they'd want to cook some expenses. Then it leaves you in a position where you cannot be able to support your application and you end up losing. So it's very important that you are aware about it. Keep records. Another question, how does one settle outstanding and paid income tax from previous years? And as long as this amount is appearing on iTax, it's very easy to pay because you just go to the payment section and you'll see the outstanding amounts and then you'll select and pay. Okay. I've not seen the Revenue Authority resolve penalties and interest in the recent past, but I know the system has been structured in such a way that if it's only penalties and interest which are pending, they can ask you to pay an amount, which then they can issue with a compliance certificate. But I have not seen them actually write off some expenses and interest from iTax. So From previous years, it is. But if it's for a business, start off by preparing financial statements, which are accurate and which you can support. Then submit those returns. Of course, it will raise a tax payable, or can you find that you're actually in losses in those years. Then from that point, you will know what is expected of you. How does one appeal penalties or get errors corrected? So the exact scenario is that tax from 1 month, 5 years ago, not accounted for, and penalties have accrued. Now discovered when trying to get a clearance certificate from the employer, and a clearance certificate from KRA. The former employer says that the lapse is at KRA and not a submission on their part. So claims have escalated to the officer handling the account, who has never resolved it. Now, one beautiful situation is that this is not your problem. Okay, so it should not stop you from getting a compliance certificate. It should not stop you from getting anything that you want from the Revenue Authority. Why? Because the law has clearly placed the responsibility to deduct and withhold tax on employment income squarely on the shoulders of the employer. Okay, so if the employer deducts the amount and does not remit, the Revenue Authority has got the responsibility of following it up with the employer. It's not your responsibility. You understand? So that is a debt between the employer and the Revenue Authority. You could pursue it for good measure because you may want to have your records clean. But the bottom line is that it is not your burden. It is the responsibility of the employer. They deducted the amount from your pay. They ought to have remitted it to KRA. Now, if they remitted it, they have records. They have proof of payment. They have got the returns which they submitted. So they have all the information. They should be able to pick it up. Unless you find that it's in a situation, because even if you were to pursue it, you may find that it's an issue that has affected maybe all the other employees, especially for that month. So if you are to pursue it, you may not see the conclusive end of that effort because you're the one individual. But if they pursue it, they're in a position to resolve it for everyone. So maybe what you can just do is try and push them to try and resolve it. But if they provided the information and all that to KRA, maybe it's now them putting effort then to see that the system has been amended to reflect the correct position. So how to invest in a tax efficient manner? Now, in terms of investment, I've mentioned to look at the returns. Okay, first and foremost, you look at highest returns, lowest tax rate. Okay, so if you see one option giving you withholding tax at 10%, and the other is giving you a withholding tax at 5%, of course, you'll go for the 5% and also try and see if you can get a higher return. Now, what I've seen happening is that the stock exchange provides a very good platform for investment. However, the fact that it has been a little bit dormant, okay, not really dormant, not very active, not very vibrant, not necessarily dormant, it's not vibrant, but it gives you a good alternative, because what happens is this: when you buy shares on the stock exchange, remember we said withholding tax on dividend is at 5% and it's final. So that means on that income, that 5% is final. If you make a gain, so you bought your shares at 100, and you sold at 120, that means you made 20 shillings per share. This 20 shillings per share is only taxed. It's not actually not taxed. This money you get back. Where the tax comes in is at the point of handling the transaction. There is a withholding tax, I think should be at 0.3%, that is levied on every transaction that you take part in the revenue. So when you're buying, when you're selling, at every point, whether you make a profit or not, you're paying the tax at 0.3%. But you can imagine then the gain, the capital gain that you generate from this is not subjected to tax. So this gives you a very good platform and you should consider it. All right, how does one go about remitting withholding tax if paid using foreign currency for services rendered? e.g. consulting services. Now, withholding tax is paid by the person remitting the money. It's their responsibility to deduct and remit. So if they are paying you the whole amount, your job now will be to declare it from an income side perspective. So you're running a business, it's a consultancy business. You'll have consultancy income, or maybe using the exchange rates when you convert the money and all that. So you can say maybe 12 million. You had these expenses, so you deduct your expenses, which are wholly and exclusively used in the generation of business income. Then you'll have your taxable profit. This is what will be subjected to tax. Now, for individuals, they will use the pay as you earn rates. So that means the first 24,000 is taxed at 10%. The next 8,333, that means this 24 is going to 32. Yeah, so from between 24 and 32,000, the next 8,333 taxed at 25%. Then anything above 32,333.33 is taxed at 30%. Okay. If it's a business, a company, then the profit is taxed directly at 30%. So you need to have that in the back of your mind, so that then you're always clear. Now, maybe I can take a few more questions from what has been typed here. So for people who work from home, can the rent amount be factored in, even a portion of it? My recommendation is usually that you factor a portion of it. So, but it's usually very debatable, because the Revenue Authority could actually disallow it in totality. But I usually say, just demonstrate that you have got one room which you've dedicated as an office, and your rent may be 60,000 for a 3-bedroom. You can argue, I take a third of this for office rent. Okay, but then this can be contested by the Revenue Authority. Just know that there's no standard way of doing it. There's no practice that has been built around this, but this is my recommendation, because it's a cost which you're incurring anyway. So you can consider that for now. Hi, I do part-time consulting. How do I reduce the tax? What can I charge as an expense when doing my tax returns? So I think this one I've tried to answer, that the expenses must be wholly and exclusively used in the generation of a business income. So it could be anything, but the catch is wholly and exclusively used. You could even say I went for training, but it should be business related or profession related kind of training, then becomes an allowable expense. So that then creates that point for you to argue that this expense was wholly and exclusively used in the generation of this business income. That is very, very important. How do individuals doing consultancies, e.g. doctors, reduce taxes on fee? And could you share ways of tax avoidance? I think I've shared this for individuals. In terms of ways, using your personal car, maybe asking for cash where someone wants to pay your rent and all that, so that then you have got a little bit more money in your pocket. So it's usually around structuring. In Kenya, the structure is very simple. They do not even give allowances. Like maybe in Canada and the US, if you have kids, you could get some rebates and things like that. Here in Kenya, you don't get any of that. They do not consider. Yet you'll find that you still have to go back into your money to pay for school fees, to pay for all those things. So you find that it becomes a very costly kind of structure. But most importantly is that they need to keep records. Now, for individuals, those expenses are very important. Now, some of the individual expenses which you can be able to claim back would be things like medical expenses. So if you so happen that you have taken up you're running a consultancy and you've taken up or you get medical services, then you can be able to claim some of those costs. Those costs that you need to incur, maybe for doctors, buying codes, buying what they call that? Stethoscopes, I think. Buying stethoscopes, paying for your license, paying for insurance, paying for all those things, they form part of your expenses. And I know this is because there are locums that you do, and then in some instances you're also employed. Around employment income, there's no deduction you can be able to make. You have to pay the tax. However, under consultancy, then you can be able to get these deductions. What if the rental income is less than that bracket? Now, if it's only income, then you don't pay any tax. Because ideally in Kenya, anyone earning below 24,000 should not be paying tax. If you're earning this amount below 24,000, but you have got another income, then this one is usually added to that other income and subjected to tax. It's fairly punitive, but we could argue, and it is the argument that I've presented to KRA. When you're relating or when you're getting to a point where you're saying any amount below 24,000 should not be subjected to tax at the rate of 10%, you cannot argue that it will be subjected to tax at 30%, because then you are reaping off all the benefits that would have accrued to this individual. It is not their fault that they're having an income below 24,000 shillings in a month. It's just that their investments have allowed them to get that level. Okay, so, but the KRA argument, the Revenue Authority's argument is that then this is added to your other income and is subjected to tax. So I will key in my contact details. Then probably if you can reach out at a point when you're willing or ready, just in case you need any clarification or assistance. I think that's that for me. Maybe Belia can take it up from there.
Thank you for all that. Very informative. I've learned so much. I hope the rest of the team has also learned as well. As he has mentioned, if you need clarification on any tax-related issue, you can reach out to him. He should be in a position to assist you. I don't know if there's anyone with a question, just as we are wrapping up. Question to close? No one? Okay, that's fine. Sorry. Okay, you, yes.
Thank you so much. Just to say thank you.
Oh, okay, yeah.
Right,
and I
welcome.
hope you guys filed your returns as well for in June. But just in case you didn't, Evans should be in a position to assist you sort that out. Thank you very much for taking your time. I'm really grateful. Yeah, thank you.
You're welcome. Probably what you could do, in case you may want to understand some of these things a little bit better, we could try and structure now. So we discuss a topic. We discuss VAT. That day we're just looking at VAT for that 1 hour, and we try and polish it out. Then we move to discuss maybe income tax, excise tax, depending on what the needs are. So that they can get even a, so that you guys can be able to get even a bigger and greater understanding of how it works. But all the same, it's been really awesome also having this discussion with you.
Thank you. It seems that over the 10 years, everything is at the tip of your fingertip. Just thumbs up. I appreciate also the insight and allowing us to reach out to you again on
yes.
Specific topics with regards to taxation. I'm really grateful for that. Maybe Corey can organize for that, and then I can let you know so that you can also organize with you on your end.
All right. Sure.
All right. Thank you guys. Thank you very much. Thank you guys for turning up and listening in. I really hope that you picked out a lot from this session. Again, if you need to reach out, kindly reach out to Evans. He has put his details on the chat. I've equally sent it to the group. Yeah, reach out and get the assistance that you need. I think that's it for me, from my end. Maybe Jennifer, you have something?
Actually, I would like to thank you very much to you, Belia, for inviting Evans, and thank you, Evans, for the amazing session that we've had today. We hope that all your questions have been answered, as Belia has said. And yes, please feel free to reach out to Evans. And thank you also to Evelyn and Corey for arranging this. So there's a lot of hard work behind the scenes. So thank you very much to all the admin. And I believe that is all. And thanks to everyone also for showing up today in big numbers. So we wish you all an amazing evening. And yeah, thank you. And bye for now.
All right, thank you.
Over to you, Evans, just to close.
All right, thank you. Thank you very much. Keep your head above the water always. Always keep paddling. Doesn't matter how hard it looks. Don't let taxes put you down. They say the only two things which are constant, they say death and tax. But I think also making money could be constant. So keep working hard and wishing you the best. Yes, thank you.
Thank you so much. Bye, everybody. Have a lovely evening.
Bye.
Thank
Good
you.
night,
Bye-bye.
guys. Bye.
Good night.
Bye.
Good night. Bye-bye.